This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the JDfn FOREX Report.
Good afternoon, traders. I'm Scott Norris here with your FOREX Report. Today is Friday, June 12th, 2009. Well, currencies were off to the races again against the dollar this week. Inflation remains the talk of all markets as central banks, including the Fed, print new money to buy government bonds. In doing so, the money supply is expanded and purchasing power is eroded. What does all this mean? It means that investors want to put their money into stocks, commodities, and any other asset that will at least keep pace with inflation. Oil this week traded well above $70 a barrel and could be near $80 by the end of June. Investors will also trade their dollars in for currencies that pose a lower inflation risk. This has driven most of the greenback's counterparts higher. In addition to the inflation story, traders are also optimistic about economic data from many regions of the world continuing to come in stronger than expected. This has in turn increased risk appetite, thereby prompting traders to buy currencies with higher yields. The technical picture suggests this week's trend may continue into next week and beyond. The momentum is catching on, and this week's rally attempts by the dollar had very little conviction. Still, we question how far market participants are ready to take this dollar selling. After all, we are not the only country printing money. Furthermore, the United States is showing signs it may be one of the first to exit recession and return to growth. Finally, we must remember why the dollar was so strong heading into 2009. Investors were seeking shelter in the safest place they know. While we have seen signs there is a recovery, there are still plenty of skeptics who question whether the worst is behind us. This means demand for dollars could come back in a big way sometime down the road. The bottom line is that investors would be premature to return to the same mentality that drove markets from 2002 to 2007. We may not always learn perfectly from history, but we don't suppose everyone's forgotten that quickly. Till next week, have a great weekend. Take care.